Buying and selling websites you need to know. Website purchases and sales carry hazards. There are no physical assets, thus you normally work with someone from elsewhere. As the internet evolves, online firms face some volatility. Adding in some dishonest people, to put it kindly, makes this industry riskier than typical. But can those who successfully handle this industry's dangers make huge profits? How can you buy and sell websites without risking too much? Following a method typically yields the answer. Our recommended process goals. There are various ways to buy a website. However, since 2007, we have refined our technique to achieve the following goals. Transparency. Anyone considering a purchase needs all the facts to make a good, sound, and safe investment. Does our suggested method do that? Information security. We know you don't want unqualified prospects to see your information. There's our recommended procedure limit who receives your information and save the most critical information for the website buyer. Well-defined targets. Buyers and sellers want the deal to finish. Does this require mutually agreed upon milestones? Our recommended website purchase and sale process. Since 2007, hundreds of transactions have tested our buyer-seller process and has served thousands of buyers and sellers well since then, achieving the stated goals. Should we recommend taking these 6 steps to acquire or sell a website? However, there are others. Step 1. Prepare website content for sale. Should you prepare facts to provide to possible internet company buyers before approaching them? This is the most crucial stage in selling your web business. This process involves gathering all essential documents, statements, and reports and creating useful marketing materials for potential purchasers. Before buyers ask or have concerns, should the information be addressed? By having your information available, can you show potential buyers that you are organized and ready for a smooth transition with few surprises? Could this boost your worth? The goal. Should there be 2 main goals in this step? 1. To give potential purchasers all the information they need to buy your online business. 2. To organize your data so the transaction is fast, easy, and worry-free. What happens? Financial data collection. Do sellers rarely provide adequate financial data for purchasers to make informed selections? Is a collection of 36 months of profit and loss statements recommended? Set up due diligence. Could bank, merchant, and tax reports help buyers verify your financial records? Should you prepare this information for review? Find KPIs. Does every firm have unique KPIs? Should you start collecting indicators and reports? If you run a membership business, could you create a monthly sign-up and cancellation report? Are other indicators such as lifetime value and purchase cost also important? User behavior, conversions, and traffic. Should every online business track traffic, conversions, and user activity? Will buyers examine this for improvements? Assess your company's strengths and problems. Does growth motivate buyers while risk deters them? Detail your operations. Should buyers know if they can run your firm similarly? Could documenting your daily business operations and any employees or contractors who assist you be helpful? What to expect? Is the hardest part of selling an online business preparing it for sale and managing due diligence? Should you expect to spend a lot of time gathering data to show to purchasers in this step? Depending on your organization, could this phase take less than a week? If your finances are chaotic or you don't have KPIs, could this stage take a long time? Step 2. Discover your website. What is it? Is general discovery learning about a for sale online business? Does general discovery seek one answer? If the information I see is correct, accurate, and thorough, would I buy this business? The goal. Does this stage aim to equip you to make an informed choice? Could financial documents, seller Q and as, and other reports aid your judgment? Should you also talk to the seller about the business? What happens? Will our customers represent various crucial businesses for sale information, which we will share with you? Financial records, records of customer retention, traffic data, known industry data, key business benefits, nature of vendor relations. Could these provide everything you need to understand the business? Do you ask the broker questions and learn about the business? Will you schedule conference calls with the business owner to learn more? What to expect? Does this initial stage ask, asterisk, do you want to buy this business? Asterisk, will a business summary provide crucial information about the web-based firm for sale? At this point, should you focus on judging the information supplied? Will the information be verified later? Since verification is laborious, is it preferable to decide if it is worth the effort? Could we give purchasers a lot of thorough information about our properties but expect you to have more questions? Should we aim to give you the knowledge you need to make an informed decision about that firm in the spirit of general discovery? Step 3. Letter of intent. What is it? Is it a statement of your intent to buy the firm? The goal. Do you aim to agree on a price, a timeline for due diligence and verification, and any other parameters with the seller? What happens? Will Quiet Light Brokerage give a boilerplate letter of intent, or could you use your own? Should a desired closing date and purchase price be specified? Should any special terms be included in the letter of intent? Is a refundable earnest deposit usually required? Does the amount vary for each transaction? If a seller accepts your letter of intent, will Quiet Light Brokerage and the seller work exclusively with you? What to expect? Is a letter of intent (LOI) crucial to business acquisition? Does an LOI give you exclusive access to the business to examine the financials and ensure it was accurately and fully represented? Does the LOI also set the terms for a due diligence phase and serve as a general framework for a final acquisition agreement? Should you inform the owner of your expectations if due diligence is successful? Should buyers be sure they want the business before submitting a LOI? Step 4. Due diligence. What is it? Is due diligence and final discovery your chance to verify that the business for sale was appropriately represented and that important elements were not excluded? The goal. Do you aim to confirm that the business is as described in general discovery and build a good relationship with the seller? What happens? Will you review third-party financial papers to confirm revenue and expenses? Will you receive incorporation and other corporate paperwork? Will you communicate with critical company contacts? Will you gain access to all corporate health verification data exclusively? In most circumstances, will you have direct contact information for the selling party who exchange information more efficiently? What to expect? Is due diligence the hardest and most crucial aspect of buying an online business? By due diligence, should you be convinced to buy based on what you've seen? Does due diligence allow you to check that everything you have been provided is accurate and that there are no substantial omissions, deliberate or not, that might affect your choice to buy the business? Should most purchasers create a due diligence checklist to track information provided to them and the seller? Will good due diligence be thorough and allow you to close knowing exactly what you're buying? Could due diligence be difficult for both buyers and sellers? Should you be aware that it involves sensitive information? At the start of due diligence, are you and the seller usually unfamiliar with one another and requested to part with a large asset? Could being sensitive to this help gather the information needed to validate any business? Finally, does due diligence give you extensive access to a corporation to verify its major components, but the seller may not be able to give direct access to sensitive goods? Step 5. Transition planning. What is it? Is negotiating final agreements and planning a business takeover involved? The goal. Should you enable rapid business operation after the acquisition? What's involved? Negotiating the final purchase agreement, negotiating other final agreements, promissory notes, bill of sale, consultancy agreements, any vendor transition planning, setting up bank and merchant accounts, inventory delivery if needed, list of assets to transfer upon closing, what to expect. Does transition planning involve 1. Preparing and implementing business takeover components and 2. Negotiating final agreements? Will you collaborate with the seller to organize the owner transition and cover all critical elements? Should you set up a bank account and merchant account as soon as possible to avoid delays in taking over the firm? Step 6. Sale close. What is it? Is it the moment you buy the firm and pay the vendor? The goal. Should you aim to gain business ownership and pay the seller? What happens? Should you sign purchase agreements? Will you transfer cash to the right party? Will you change major asset ownership with the seller? What to expect? Is meeting at the closing table exciting after general discovery and due diligence? Are final agreements, financial transfers, and ownership transfers into your name the main tasks at this stage? Is the company acquisition finalized after money is transferred and the final purchase agreement is signed? Will you have a basic idea of how the business works, or could there always be details to learn? Does training let you learn about the business from the seller directly? Does most training happen remotely and over the phone? Do buyers generally have a training period before running the firm, while others prefer to talk with the vendor after the closing? Should training be included in the final purchase agreement? Will many vendors want to help you as much as possible after the acquisition since it will benefit both of you? Enjoyed this video? Don't forget to like, subscribe, and leave a comment below. Stay tuned for more life-changing tips.